Yeah, I'm losing my
So here
edge.
today, we're talking about foreign exchange strategies, not the first place that people go when they open up a brokerage account, a trading account, they fund it. And first thing they usually type in is AAPL, and then maybe AMZN and MSFT, the sexy tech stocks. But I will contend that there is a lot of opportunity in foreign exchange. And a day like today, where stocks were up slightly, then they're down slightly, they're hugging unchanged. You've got a British pound market that's getting absolutely annihilated, a euro currency market that is up on the day, a US dollar market that we're going to focus on here at the small exchange that doesn't know where to go. That's a lot of opportunity. And, I like to think about asset classes and building strategies and all this fun stuff that does hopefully get to a profitable trading account on the day, month, and year as being like casts of characters, and stocks are like the friends of this situation. Like everybody knows Apple, Amazon, Microsoft, and then Tesla's kind of like Joey. He shows up and it's like he could do anything. I don't know. It's super random. Foreign exchange is like Arrested Development. It's got like a cult following, but it doesn't mean that it's a smaller cult following. Doesn't mean that it's worse, right? Some might contend, myself included, that the content there is actually better. There might be even more opportunity in foreign exchange markets. Like, I don't know who Jason Bateman is. Jason Bateman is like the euro, probably kind of the most stable. British pound is like Job, Will Arnett's character. None of you know what I'm talking about. I'm just going to stop there. And it's all to say that there's a lot going on here in this US dollar market and all the cast of characters that are behind it. So don't just stay in that world of stocks or friends. Add something else to your Netflix queue for once. But US dollar has struggled to find a sustained bounce here. It's been on the downtrend ever since those highs of March. And to zero in on these highs, though, excuse me, those were highs in the US dollar the last few years. This US dollar has ascended the last half a decade during the Trump administration and a few other things. There was Brexit going on that weakened the British pound, some euro interest rates going below zero faster than our central bank has brought interest rates down to zero. All of that stuff powering a bullish US dollar. But ever since the crap hit the fan here in February and March, the US dollar has been on a downtrend, and our index here in the futures that trade on top of it got below 150 briefly, has bounced back a little bit, but this morning was seeing some more bearish sentiment and is now back below 150 and can't really sustain a bounce. And now we're going to get into some the characters here in a second, but the asset itself here, the US dollar, has seen a lot of two-sided action. And this chart here is showing you the daily returns for / SFX small US dollar futures. And you can see here, prior to the outlier moves in March, very confined range. You'd be hard pressed to find a day where this US dollar is moving outside of half a percentage point here. And half a percentage point is pretty much right here on the upside and right here on the downside. So not a lot to do there. Currencies, if you're looking at a 1 or 2% move in equities, currencies usually do about half of that. So a 0.5%, or what would be a big day, is a percentage point move in these currencies. But after all the shifting around here in February and March, you have a different environment here where you're not seeing any of the outliers. And rarely do people want to see outlier moves if they're trying to trade short-term two-way action. But what you're seeing is almost a doubling of these daily moves, a lot of red moves, a lot of green moves on the US dollar's way to this bearish trend that we've seen. But a lot of moves outside of this 0.5% here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 moves outside of 0.5% to the upside, and then plenty to the downside, because we have seen a bearish dollar in the last 4 or 5 months. So if you are just looking for a simple FX trade, straightforward, the small US dollar is right there for you. It's US dollar forward against seven currencies there on the back end. And it's, to me, kind of the simplest place to go for one FX trade. And it's showing you plenty of opportunity. What I would look for in this small US dollar is moves outside of 50, 75 cents. And that's what's going to get you that kind of half a percentage point move that I would look for short-term price action trades. And you've been getting plenty of them. You got one actually this morning with all the mess that's going on in Britain. Before that British pound sold off this morning, euros were up so much that US dollar was down about 60 cents. British pound sells off huge, pushing that US dollar. Now it's actually up about a dime. That's a nice trade in there, just looking for that move outside of 50 cents, 60 cents, 70 cents, and then a nice reversal. So great short-term action. But now we can get into a little bit of some long-term trends here and look at something that might take a little bit more than a couple minutes or a couple hours here. And what I like to do is look at these five main currencies that push around the dollar. And so, like we talked about earlier, there's this inverse relationship where it's the US dollar against these five, and then also the Mexican peso and Chinese renminbi, which the futures on those aren't as easily available as these five. So we're just zeroing in on these. And so when you have, a euro market here in green that moves lower here in mid-March, that's what correlates to the move higher in the US dollar. Now, what's interesting is these markets that since March have been beating up the dollar, sending it lower. As you can see from after all of this junk, everything appreciating here as the dollar has moved lower. What's interesting to me is these markets have been alternating. The one that's beaten the crap out of the dollar is changing. It's almost like a 5-person tag team match in WWE against one wrestler. Or they here it's the yen here in purple, that's beating up the US dollar. They tag in the euro. No, now the euro is beating up the dollar. And all of my crappy analogies aside, it is creating an interesting companion trade, whereby if I'm selling that SFX, then I'm in theory buying this basket of currencies here. What I can do with my short US dollar is say, okay, so I'm short the US dollar here. I'm long all of these. Euro's up 5%, Aussie's up 4%, yen's up 3%, and British pound and Canadian dollar actually down on the year. What I can do is I can sell that US dollar, which causes me to buy all of these, and then sell the most expensive one as well, because I don't want to necessarily buy the currency that is the outperformer already on the year, because we see often that these are changing constantly here. You saw to start the year, pounds were actually on top of euros. Now there's almost a 10%, if you include today's move, almost probably a 7 or 8% difference between pound and euro to the other side. And so what I would look to do is, if I'm selling US dollar, if I'm selling SFX, pair a short, strong currency against it. If I'm buying SFX, pair a long, weak currency against that. But I'm not just going to leave you there, because I'll paint this picture. I'll fill in all the lines and everything for you. Buying SFX futures gets you short exposure in all of these, while selling it does the opposite. And this is just further outlining with a nice little graphic that my buddy Dean in production made, highlighting all these different pieces. So if I buy this little guy here, I'm selling all of these. If I sell SFX, and I'm buying all of these. And it's a lot of people tend to think of these inverse trades, and I get it, because it's an extra step. And unfortunately, in foreign exchange markets, you can't just buy dollar against nothing. It's very hard to do there, because that US dollar, even if you have cash in your wallet, is constantly appreciating and depreciating in value relative to all the currencies of the world. And so we have to price these currencies against something. And so it's not this case of US dollar goes up and then these currencies go down. It's these constantly shifting things that are happening that you can't really get ahead of. So either way, you're buying SFX, selling all these guys, you're selling this, you're buying all these guys. Moving back to this chart, long US dollar traders can hedge by buying weak currencies, and then vice versa. If you like to go with trends, then fine, you can buy US dollar and buy this strong euro trade, and you can sell US dollar and sell this weak British pound. But I tend to like to go on the extremes because you can see how often they change hands. I keep getting I didn't even highlight the fact that Australian dollar was the weakest by 5, 6, 7% in late March. Now it's the second strongest of this bunch, and so I'm looking at those leaders and laggers to get on the other side of here. And so what we're looking at is pairing the long SFX trade with long pounds or Canadian dollar, these two weakest pieces, and now actually British pound is another percent lower here today. I made these graphics last night. And if you're selling this SFX, you could look at selling the outperformers here in euro and Australian dollar. And what is nice is that small US dollar, okay, they're smaller futures than traditional, but / SFX or whatever the nomenclature is in your platform to get to the SFX futures is about a 1-to-1 trade with the micro currency futures here. So I would look at buying SFX and buying / M6B. On the flip side, I could sell SFX and sell M6E. I right now like a little bit of this long SFX, long pound trade. And if you want to get absolutely nuts, you could also look at buying one / SFX and selling a 5 or 10 delta put in the big / 6B contract against it, because those micro futures are a tenth the size of the big futures, and 5 to 10 delta put, that's going to get you a tenth the exposure. The only thing you have to monitor is that delta. If 6B continues 100 points, 200 points, 300 points lower, you're going to gain some extra exposure in pound, and it's going to get larger. You're going to start here, and then your pound exposure is going to get larger than your SFX there. So you got to have to monitor that. But that's a cool trade, I think, getting some option premium against your currency trades in there. So those are my foreign exchange strategies for you today, utilizing the SFX futures and some of its little playmates here in the euro, Australian dollar, Canadian dollar, and British pound.